There was a change of colors for the indices, as all 5 of the major markets saw red. The greatest losses were in the Dow Jones Industrial average, as the 30-company index shed over 2 percentage points. But the losses were even greater when considering the various style boxes. The mid-cap and small-cap segments of the style boxes exceeded the losses seen in the major markets. In the end, the loss of 1.69% in the S&P 500 was modest compared to the other market segments. For the S&P 500, every day of the holiday-shortened trading week saw a loss. In fact, this marked the longest consecutive stretch of losses since February of this year. Sadly, there was no green to be seen even at the sector level, as all 11 S&P 500 sectors ended lower. Real estate saw the largest decline after logging the greatest gains the week prior, yet retained the top year-to-date position at a sector level. On Wednesday, the Federal Reserve released their September Beige Book. For those that are not familiar, the Federal Reserve explains the Beige Book on their website, saying, "The Beige Book is a Federal Reserve system publication about current economic conditions across the 12 Federal Reserve districts. It characterizes regional economic conditions and prospects based on a variety of mostly qualitative information gathered directly from each district's sources. Reports are published 8 times per year." Reviewing the September Beige Book, we see a focus on the continued reporting of prices that have increased with additional emphasis on growth, supply, sales, and shortages. This served as a good lead into Friday's Producer Price Index, which had been significantly impacted by the rising prices and global shortages due to the ongoing supply chain challenges since the beginning of the pandemic. The headline Producer Price Index rose 0.7% in August, exceeding the 0.6% expected. But it was the annual increase of 8.3% from August to August that caught analysts' attention, as the Producer Price Index set a new all-time high since the data first began to be collected back in November of 2010. This stands well beyond the target inflation number of 2% the Fed has often cited. But to be clear, it is the BEA's Personal Consumption Expenditures Price Index that the Fed looks to the most for this metric, the next reading of which will be on October 1st. But this week we will see another potential inflation assessment in Tuesday's Consumer Price Index.